Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I've got a whole bunch of Bitcoin and crypto stuff. Things are starting to look incredibly positive and adoption continues to snowball. So I want to show you that. Some crazy price predictions from institutions, some nice on-chain data. Then I'm going to go into some charts, okay? I'm going to talk about this idea of a bear market rally versus a blow-off top. I cannot find any evidence to say that that was a bear market rally. So I want to show you that. And then I'm going to show you a bit about inflation, hit the charts. And when we get into the charts, I'm going to show you exactly why I think this melt up is happening. I'm also going to show you where invalidation comes. I'm going to show you exactly how to figure out whether or not this is a bear market rally that we've just experienced in the equity markets. And we're going to find out very, very soon whether or not my primary count for the cycles was correct, or whether indeed we have just seen a local top at resistance for the S&P. We're about to drop into a cycle low here, which means we have to move the count to where the blue arrows are, and then we get to find out whether or not we have just seen a bear market rally or are about to experience a melt up that everyone will hate, no one will understand, everyone will short, everyone will doubt, and then they'll all cry and be angry when they find out they were wrong to short this rally. So if that sounds like something you're interested in, make sure you sit back, relax, hit that like button, and let's get into today's very special episode. Joe007 here. He says he rarely discusses the price, but the sentiment is currently bordering on ridiculous. So let me say it straight. There is no rational thesis for sub 20k Bitcoin at this point. Fear FOMO ratio has gotten way out of whack, and expectations of another FTX level black swan are unlikely. Act rationally. Now this, if you don't know, is one of the biggest, if not the biggest, Bitcoin trader on the planet. Bitcoin is still below the realized price of 20k. 2-year realized price at 33k, and the short-term holder price is at 18k. Historically, this situation does not last long. We've also got Wyckoff accumulation about to confirm inside a bigger Wyckoff accumulation. You can see here, this is a 4-hour chart, and it starts from around the 10th of November and spans to today. And you can see that we have almost completed the schematic. We just have the sign of strength left to complete before we bust out of here. What's interesting about this is all of this is contained. If I go here, you can see this is the 10th here, this low that we made during the FTX plunge. So all of that Wyckoff schematic that I just showed you is contained within this spring of an absolutely enormous Wyckoff schematic that I've got here. So if we can get the sign of strength and blast up, that confirms this as the Wyckoff spring. And then this larger pattern on the daily time frame becomes validated. And I know what a lot of you be thinking. A lot of you will be thinking, but there's one more dip, bro. 10k, 12k, 14k. There's got to be one more dip. Okay, maybe. But I just want to say it, maybe not. Okay, if that spring confirms, if this spring confirms, then there is no more dip. Okay, that was the bear market low and we've seen it. So you have to be open to playing both sides of the market. If you're wondering why Bitcoin continues to hold up against this much deleveraging, it's the long-term holders that are not giving up their Bitcoin. They are actually absorbing the sales. They're buying spot and adding to their stack. And you can see that here. Okay, here's the price at the top. These long-term holders just continue to accumulate. The people that are selling down here are selling to stronger holders, people with longer-term conviction. And I've shown this before, but it's important to see again. Right at this 16,500-ish level, a record 1.5 million coins, okay, over 7% of the entire supply has been traded, has exchanged hands. What this tells me is that that low from back here, with a record volume on Coinbase, that was a massive manipulation move to take coins off of retail and put it into longer term institutional hands. That is exactly how this game is played, and that is exactly what this data suggests. At the same time, we've reached 12.3% of worldwide Bitcoin adoption. There is no stopping this now, and I'm going to show you that 36% of Americans plan to buy cryptocurrencies within the next 6 months. Massive money is about to flow in this space. Russia's head of Congress Finance Committee has said that Bitcoin and crypto products will definitely be legal next year. Bitcoin is being rapidly adopted in Russia, and you can see that demand for the Bitcoin mining ASIC rigs, the mining rigs, has skyrocketed in Russia. And it's not just Russia, because over in Texas, you can see here the Bitcoin logos. These are Bitcoin data centers. The white are wind power plants, and the black dots are solar power plants. Texas is also racing to gain hash, and this is reflected in the security of the network. The network hash rate is at all-time highs. record high investment into the Bitcoin network comes from investors with high conviction that see Bitcoin as the perfect money replacing trillions of archaic state fiat. Attacks on the Bitcoin network increase conviction, and Bitcoin is designed to be attacked. It increases conviction, hash rate, and security and price. The more you attack it, the more you fail, and the more you fail, the more people realize this thing is not going anywhere. Here in the UK, the government is finalizing plans to regulate crypto. There's not much data or detail available for this at the moment, but I will make sure I report back to you on this as soon as I can. I thought this was hilarious. Max Kaiser says agreed, okay? One Bitcoin may well be worth $1 billion, says Fidelity. Now, why do I think this is hilarious? Not because of the valuation. This is looking out to 2040, I believe. But why I think this is hilarious is Fidelity have just stolen Plan B's stock to flow model. They've called it their Bitcoin supply and demand model, but this is just the stock to flow model. They just took this off of Plan B. So I thought that was funny. Bitcoin often does incredibly well during Christmas periods, okay? The 3-week run up to Christmas, which we're just about to enter, often sees massive upside for Bitcoin. And you can see what we did in 2019 at the top here. We had a washout, a bump and run reversal, and then we exploded higher in a parabolic rally. Is that possible today? Doesn't seem too far-fetched when you compare the fractals against one another. I had a few people ask me about what if the government plan to ban Bitcoin, what if they make holding cold wallets illegal? The answer is simple. Okay, the Nigerian government has outright banned Bitcoin and crypto, yet the market is absolutely thriving. If I hop back over to this diagram I showed you earlier, look at Nigeria, okay? 20% of Nigerians use Bitcoin, despite it being illegal. It just goes to show that you can try to ban it, but there's no way of actually stopping it. There's no way of actually enforcing it. And you can liken this to the war on drugs, right? Drugs have been illegal forever. They spend all this money trying to enforce it, but drugs are so easy to get. Drugs are they're everywhere. Drugs are absolutely everywhere, all over the world. They're easy to get, okay? Despite spending all that money and making all those laws and putting people in prison over this every single day of the week, you can still get drugs wherever you want. Okay, they're never going to be able to outlaw peer-to-peer transactions. They're just never going to be able to enforce this. And Nigeria is proving this. They've had a CBDC for over a year, and it's got less than 1% adoption. I think it might even be less than 0.5% adoption. And Bitcoin and crypto are illegal, and they've got 20% of the entire place using it. Bitcoin really is hope. It really is humanity's one chance at freedom. Moving over to traditional finance, I've shown this pattern over and over and over again, and this is becoming the staple of this channel. Now, does that mean we couldn't roll over and take out the lows and go another 50% down from it? No, of course not. But I just want to caution, and I'm about to show you a whole bunch of data that backs this point up. I just want to caution against ruling out new highs, ruling out a massive, massive move higher. I've also been quite vocal that I think we're going to see a new all-time high for Bitcoin in Q1 of next year. And whilst nobody thinks that is possible, I found this and I was thinking, this is exactly how I see it. He thinks the top will be 130k. I think we'll be capped at 120. I think maybe 110 even. He also thinks that we're going to see this year. I disagree. I think this is going to come into Q1 of next year, and that is only under the conditions that this melt up validates. I'll get to the validation part in a minute. But this is how I see Bitcoin playing out. I see this melting up in the stock market, and I see Bitcoin playing a massive, massive, massive catch-up rally that will end up looking something like this and topping in March or April. The bear's greatest hero has fallen. Michael Burry is no longer short. I also made a video, you can go and search for that in your own time if you're interested, that he actually sold the bottom down here. He emptied his portfolio down here. So it is what it is. And some of the biggest bears on Twitter are now capitulating. They're saying he's closed his shorts. He's been burnt too many times the last few weeks. He's going to watch today that we tank 5% now that he's no longer short. And unfortunately for this guy, and I'll show you this in the charts, he's completely missed his timing. We are about to experience a pullback into a daily cycle low. And then from there, it's decision time. Then from there, we get to find out whether or not this was a bear market rally or whether or not this melt up can indeed be validated. The new bearish narrative is bonds rally, hence we're in a risk-off environment, okay? But this is imprecise. And the reason for this is when the economy is in a deflationary part, i.e. a recession, then yes, this is true. But we're not there at the moment. The economy is in the Goldilocks zone, which means we're not in a recession, and therefore this is not a sign of risk off. We're actually in a 2018 scenario. This means the melt up could indeed be validated and about to catch an awful lot of people offside. Meanwhile, when we look to Asia, we see that they are up 8 to 9% in their indexes. And they're breaking out of massive, massive, massive year-long downtrends with confirmation on the RSI and the MACD. This is not the sort of look you get during a bear market rally. And of course, this is mostly being driven by China easing their restrictions and their lockdowns at the moment. So the reopening of Asia is going to lead to Asian markets ripping higher. For those of you that are convinced we are indeed in a recession and we are indeed about to crash, I just want to remind you that this is the most anticipated recession in history. To be bearish at the moment is to be in the crowded part of a trade. It is crowded to be bearish at the moment. When we take a look at the probability of recession over the next 12 months, okay, this is the highest we have seen since 1969. Is the crowd going to be right? I really don't think so. Of course, I could be wrong, but I haven't been wrong about this rally so far. The US economy is actually not in a recession, and it's about to rebound strongly. And you can see that here. Okay, all of these ISM data, none of these point to us actually being in a recession. And this is the quickest worldwide market breadth thrust in 50 years. The percent of major country indexes above their 200-day moving average just jumped from 0 to 75% in only 15 days. And if we zoom in on this chart and take a good look here, okay, what just happened is not indicative of a bear market rally. This is absolutely not what you see at bear market rallies. This is what you see during the end of a bear market. Okay, if we go back, we had multiple bear market rallies throughout this year. Okay, multiple. We got no such breadth thrust during those bear market rallies. This is a completely different look and speaks to wide market participation, in each major average. This is not something you see during a bear market rally. We know we've had big deleveraging in the markets, but the weak hands have now been flushed out, and you can see that here. We are also officially in panic mode, as you can see. Again, something that usually coincides with major market bottoms. This level has seen exceptional market returns in a 6 to 12 month period since 1990. The only one exception was 2002. Consumer confidence is beaten down, and we are at record levels for consensus to be betting on the markets to continue to collapse. Again, this is a crowded trade to be bearish. I will flip bearish if the charts tell me to. But so far they haven't done. Now we will get an answer very, very shortly, within a couple of weeks, I think, and I will show you that in just a moment. It's important to point out that December the 13th is the CPI, the US CPI data. We need to see this cool off for this melt-up thesis to be validated. If we get a hot CPI print, that is to say the CPI is above that of last month's, then this will likely become invalidated. But that hasn't happened yet. And as long as we can get a lower CPI print, then you better believe me, the bears are going to be homeless. Shorts are going to be homeless. Get ready for elevated inflation becoming the new normal. I've been talking about this on and off for months. Okay, I've said that I would not be surprised to see them move the goalposts, and now we're kind of seeing them hint at this. They're saying, look, must inflation be brought all the way down to 2%? So if you've been watching this channel for a while, then this will be no surprise to you. We have been expecting to see them move the goalposts, maybe from 2 to 4%. Are they starting to lay the foundations for this? The Federal Reserve has just signaled plans for a half-point rate increase next week. So that is, of course, below the 75. But perhaps the terminal rate could become higher than expected. So there's bullishness, there's bearishness. Ultimately, if I hop back into this chart, we've been saying 50 basis points here should catalyze the move up, and then we'll be looking for a 25 or a 50 and then a pause. Okay, so as long as we can get a lower CPI print and a 50 basis point hike, this is going to become validated, and I bet you that Bitcoin will join in this major upside rally. So just before we get into the charts, this is how golden decades start, okay? Silver is breaking out against the NASDAQ. This could potentially be enormous for the precious metal. And this is against the backdrop of central banks adding 31 tons of gold to international reserves in October. Something I expect to continue. I expect to continue to see central banks add gold. We are likely going to continue to see that for two reasons. One, they know that at some point they're going to have to turn the printers back on, and inflation is going to be way worse than it was during the peak of the last couple of years. And also because they are starting to launch their central bank digital currencies, and Indonesia has said their central bank digital currency could be used in the metaverse in the future. Are you starting to understand what's happening? I think they are going to back these CBDCs by gold, and this is one of the ways that they will maintain a huge wealth advantage over the rest of the world. They will stack gold, they will reprice gold to $20,000+ an ounce, and then they will use it to back their CBDCs. So let's get into the charts. The most important question, okay, for me at least at the moment, is bear market rally, or can we confirm the melt up? So how do we know? Well, to me, it looks like this would be a logical place to top, and it looks like this blue alternative count is likely going to become validated. This means we can expect a cycle low to form, a swing low, right around the 12th of December, which just so happens to be the day before the CPI print. So I wonder if that means the most logical thing from here is that we come down into the 12th or the 13th of December, we get a lower CPI print, and then we shoot off out of here. An alternative idea would be that we have not yet seen the top, in which case the green count will be right. We'll move up here, drop down into that cycle low around the 4th or the 6th of January, and then we will get a bounce. So the big question is, how do we tell if it's a melt up or if it's a bear market rally? And of course the answer is simple. Whether the cycle low forms at the blue count or the green count, okay, wherever it forms, once we get a bounce, we must not lose that cycle low. If we come back down and take out that cycle low, then that is the trigger to tell me this was indeed a bear market rally. The bears are correct, and the most crowded trade in history is about to produce a record amount of wealthy speculators. If, however, we do not take out that low, we form the daily cycle low, we move up here, and then we start to rally, then bears are going to be absolutely destroyed. We're going to validate this melt up thesis of mine, particularly when catalyzed by a 50 basis point hike, and shorts are going to be completely wrecked. So no matter what your positioning is, no matter what your conviction is at this current time, it's important not to be dogmatic, to be willing to pivot and shift your sentiment on a dime. I do not know what's going to happen here. I know that we are going to get a cycle low either at this blue arrow or this green arrow. It looks to me like the blue arrow may well be what's coming. And once we form that cycle low, we need to see it hold. Whether or not that low holds is how I will be making sure I'm either short when we're about to go to new lows or long ready for this melt up. For now, I continue to push this trade, and the same is true of the Nasdaq. The Dow Jones continues to make higher highs and higher lows. I do expect some level of correction here in line with that S&P 500 move. So that's what I was saying as well earlier, that the this bearish guy from Twitter that was saying, oh, now I've sold, now I've closed my shorts, will probably get a pullback in the S&P and the markets. And that's indeed what's going to happen. You know, we're going to come and drop down into this cycle low. Now he's closed his shorts, and then he's probably going to get short again, and then we're going to come tearing out of here. But that's just how markets work, unfortunately. If we look to the VIX, okay, look again, right into resistance, our magical red line. No daily close above, so this does not speak to risk off at this stage. UKX, are we going to get a little bit of a pullback into this inflation reading and then come tearing out of here and take out the highs? I think that's most probably what's going to happen. Gold, continue to push this gold trade. I would expect this to likely let me know whether or not we've got a correct count or whether we're going to have to move these counts to something like this soon. So we'll find out. For now, long and strong continue to push, and the same is true of silver. Long and strong continue to push. I would expect this to resolve higher rather than lower. Bitcoin needs to confirm this Wyckoff accumulation, as I've already shown you, but once we get above here, it's going to get very bullish very quickly. So don't underestimate Bitcoin's ability to snap up here in an instant. Still continue to push my Zcash trade. I'm still pushing a MATIC long, as you can see, and I'm still sidelined for my XRP position. The dollar is still bleeding, isn't it? Still not really showing any signs of strength. I would have thought some level of like big bounce up here would have been reasonable before it comes down. But there's always a chance that we're just going to do something like this, just going to keep breaking down all the way to like 88. In line with this melt up thesis. Is this what's going to happen? I mean, that'd be very unusual price action, but then again, so would the melt up, right? This would be incredibly unusual too. So I wonder if that's something that could happen. That remains to be seen for now. But the dollar continues to look weak. The dollar does not speak to bullishness in any way, shape or form, as far as I can tell. The same is true of the 10-year yields, that they're just continuously bleeding down. Can't really catch any kind of bounce. And even the 2-year yield, it looks like it was thinking about doing a head and shoulders. Looked like it sort of has broken down, and now it's kind of faking out. Is it going to come back down and trap everyone once again? That remains to be seen as well. It's probably not going to do a whole heap until we've seen what the Fed has to say. And Geo continues to be a high performing stock. I think we've probably seen the next box here. So we could draw a box, something like this. How long it will stay in here for, we don't know. I might have to readjust this down if we make another low. But for now, here's the box, and the plan for me will be to see if we can trade around inside this box for a bit and then break out. And when we break out, I will add another position, move the stop up to below the box, and the stop for the initial position will be here as well. and then we will have some profit locked in, double the exposure for no additional money, no additional risk, since we're using the profit from the first trade to finance the second trade. And then we'll be looking to repeat this as many times as possible. If it's going to keep forming bases and keep forming bases, we'll keep doing this until we see a clear sign of a top and a failed breakout from a box. So that's Geo for now. We've got our box drawn for now, so we'll see if we can consolidate here and then look to buy that breakout, as I said. Apple's still continuing to do a whole lot of nothing. I kind of expect this to do a whole lot of nothing and then break out from here if we can get a lower CPI print. So that remains to be seen. If you're not in already, that's quite a nice trade, a breakout of that line there. And the fact that it is less steep than this line, obviously that's a steeper angle than the one before. The less steep the line, the higher probability it is. So obviously the less profit you make because you're in later. But in this case, it's kind of sideways from the entry anyway. So that's one trade idea. Tesla, is this breakout retest looking for resumption? Does this become a long in here? It could well be. It could well be. I'll keep my eye on it. I'll see if we can get a strong resumption off of this trend line. And if we can, then I will be interested in adding a long that will look something like that. No changes to Marathon, Riot, MicroStrategy or Coinbase. Still looking for Bitcoin to confirm its Wyckoff spring, and then we can get long and strong across all of these assets. So that is the analysis for today. I hope you enjoyed it. Drop a like on the video if you haven't already. Subscribe if you're not already, and turn those notifications on if you want to see how I continue to deal with these markets in real time as a pro swing trader. I think it's going to be kind of a dull week and a half until we can get into the CPI print and see what happens there and see what happens with the Fed hinting at this 50 basis point hike and whether or not we can confirm that and have a 50 basis point hike. Until all of that is kind of ironed out, until all of that is concreted in and the market knows for certain, I would expect us kind of to just slowly bleed down and drop into those cycle lows. Once we have those cycle lows formed, as I've said multiple times now, it's all about can we hold those cycle lows? Because if we can, then bears are about to get absolutely scorched. And if we can't, then I will be closing all of my longs, flipping short and looking to take a massive, massive, massive short position to the downside. So that's the plan. I'm sticking to it. Probably is going to be a slow week, week and a half. But once we get to the 13th and we see that CPI print, things are going to get very, very exciting very quickly. I can assure you of that. So in the meantime, look after yourselves. I hope you're doing well in life. Enjoy the rest of your week. All the best. Take care from me. Cheers. Bye.